Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, Nvidia vaults past Apple and Microsoft to become world's most valuable company, as well as that rich countries plan to buy more gold despite record price. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, we'll come to that near the end, so make sure you stay around soon and see that. Before we get straight into it, make sure you subscribe. The first article to talk about is to do with Nvidia and Apple. Now, the spot of what is the most valuable company in the world has now been claimed by Nvidia after the chip manufacturer overtook both Microsoft and Apple. This comes following months of insanely strong stock price growth, which has largely been driven by the increased demand for their chips and the recent AI hype. Now, this is of course, continuing the chain of Nvidia videos that we've seemingly been making recently, as Nvidia, as this kind of article does basically conclude, is kind of been a hot topic as a result of the growing hype, especially around AI, and arguably that is the kind of key reason now we're always talking about Nvidia, as when we do kind of talk about Nvidia, we're talking about one of the big tech giants somehow incorporating the latest Nvidia chips, or talking about how the latest Nvidia chips are going to benefit their kind of production process, or more importantly, how their Nvidia chips are now going to help them build new large AI generative models. And that's kind of been the key thing, as the likes of course, ChatGPT from OpenAI, that's of course been powered greatly by the Nvidia chips. And as we know, as we've heard from numerous kind of AI spokespeople and that kind of thing, AI respected members of the kind of AI community, if you'd call it, we've definitely heard a great deal of rhetoric with such individuals stating the benefits and the kind of things that of course these new Nvidia chips will offer to building and also processing the power for these AI models and training those AI models. And that's also been a kind of key thing that Nvidia have pushed themselves. This hasn't just been a kind of external matter with companies kind of hyping up Nvidia. No, instead we've also seen Nvidia really hyping up themselves with Jensen Huang, if I'm pronouncing his name correctly, of course, on all of his kind of recent conferences or recent chip releases, he's come out and he's constantly spoken about the way that these new chips are going to power AI. It's really been him and the kind of name that he's now built for himself, with the kind of reliability and the fact that so many people do trust the work that Nvidia is doing, and that's why Nvidia is able to kind of capitalize on the hype that is coming with AI, whilst other chip manufacturers or less well known kind of tech giants, tech firms, aren't able to kind of find the growth that Nvidia is finding from this recent boom. With that though, of course, we have heard some concerns from certain traders, but also certain regulators and that kind of thing, with some wondering whether this is kind of some unsustainable growth for Nvidia's stock price and basically company growth, as this is all largely still built on hype. We're still waiting on many chips that were announced even a year ago to actually arrive with customers, with big tech firms like Amazon, which we recently spoke about, who had changed up the way that they wanted to receive their chips from Nvidia. And so as a result of that, some have questioned the sustainability, as I said, and also questioned therefore whether this is kind of a bubble that is being created, an AI market bubble, as the kind of hype that comes with the AI boom has largely been driven into Nvidia, as I've said, and as a result of that, arguably it's overvaluing the stock far above the kind of true market valuation. And so that's the kind of worry that many are voicing. The question will be, of course, whether this is fair, whether this hype is fair, and whether this is actually overvaluing Nvidia, or in fact it's just pricing in the true future value which Nvidia does hold, as this kind of extreme power that Nvidia does hold within the chip making sector, which of course powers basically the world, it does seem nowadays, but most importantly AI, is something that really you can't understate. And therefore it is, or at least you can't overstate actually, and therefore we can kind of understand that this is less likely to be maybe a boom, a kind of period of hype and not actual value, than maybe what we've seen before with other boom and busts. With the share price of Nvidia climbing another 3.2% over yesterday to reach $135.18 a share, and therefore putting the market cap of Nvidia at $3.332 trillion. So a massive market share right there. Ultimately, Nvidia is now reaping the reward for being the biggest name in the scene during a massive boom in demand for chips, which can be trained, which can train AI models, with the likes of OpenAI's ChatGPT being the most popular of the new generative AI models, which utilize the technology offered by Nvidia's cutting-edge chip technology. The cryptocurrency hype also played into the rise of Nvidia's chips. However, that said, the somewhat recent cryptocurrency bust also acted as a thorn in Nvidia's side. It now stands at $3 trillion after being only a $3 billion company 2 years ago. And I do say only, of course, with some quotation marks, of course, as it still was a massive company back then, but it kind of puts into perspective how large of a growth this really has been for Nvidia over the past 2 years. Now, this recent stock price rally to the upside has single-handedly driven about a third of the 14% year-to-date increase in the S&P 500's index price, with this rally, according to the FT, even shocking the most bullish of observers. For some context, the company was founded just 31 years ago to build PC graphics cards for video gamers whilst being based in Silicon Valley. Within the past year, the company has seen successive quarters of huge revenue growth. The shares of Nvidia are up 170% since the start of the year. So big moves made by Nvidia. And of course, this is kind of a very monumental overtake now that we've seen from Nvidia, overtaking Apple and Microsoft. But as I said at the start, is this now signifying this kind of boom that we're seeing within the AI space, and therefore a possible bubble which has already formed or is forming? And does that kind of bring with it some worries and concerns that we need to voice and kind of take a look at further? So definitely keep your eyes on this topic. Always an important one that I think we're always covering on this channel anyway. But definitely keep your eyes on any Nvidia news, Apple news, Microsoft news, anything to do with AI as well. So a very important one there, but lots to cover nonetheless. Next article to talk about, though, is more to do with an asset that we would cover on the charts, that being gold. If of course the article can load up, but if it doesn't load up, I'll just continue nonetheless. But there we go. The article that we're talking about here does reference gold, which of course is something that we're usually covering on the charts. It's usually kind of a bigger topic on the charts, as of course gold is this safe haven asset of the world. So when we're talking about conflicts, geopolitical tensions, that kind of thing, that directly plays into gold's price and the way that gold is being valued and that sort of thing. And that's why we do cover it as a very important asset, and it does move in a very interesting manner when we're looking at the charts, when we're looking at the way things are trading, and that's why of course this is always an important topic to cover. But less commonly we talk about it on the articles section, but previously we have, of course, and it's really when we start to see some fundamental news come out which is directly involving gold, and that's what we're seeing here with the central bank of advanced economies now expecting the gold's share of the gold's share of global reserves to rise at the expense of the US dollar. This comes as such banks look to follow the lead of emerging markets in buying up large swathes of gold. And of course, this kind of follows the analysis that we've been doing on the charts to do with gold, as we've kind of been referencing this massive rally that we've seen in gold's price over this year so far, really. Even possibly, I'm not sure exactly whether we were seeing it, just the same ending off last year, but definitely to the start of this year, we've seen this massive rally take place in gold's price. And that was largely back when we were expecting the Fed to start cutting interest rates earlier than of course we know they are now. But despite the kind of change in the Fed's monetary policy and their outlook, and that kind of being more hawkish now, gold's price has remained at these kind of very high levels, all-time high levels, which kind of references something to do with the kind of fundamental context for gold, the actual supply and demand, kind of issues that maybe gold is facing and that kind of thing. As ultimately, when we've previously noted gold on this kind of article section, we've noted the kind of frenzy of Chinese demand for gold as a result of the kind of issues within their property market and the economic downturn that we have seen in China, with that driving investors towards gold. Although the Chinese government have of course tried to prevent citizens from buying gold in large swathes, citizens have still done that, and as a result, gold's price has pushed higher, greatly, and that's kind of why we're at these levels currently. What's interesting with this article, though, is it does mention this kind of switch away from the dollar and back towards gold as kind of global reserves, the share of global reserves, which is of course very, very significant and possibly hints towards some future issues which are of course rising as certain nations, certain governments and certain financial institutions fall out with the dollar and lose as much faith as they may have had before with the dollar. And that's always a very important thing to recognize, especially when we're talking about other assets like gold, which are, as I said, a hedge against the dollar. With almost 60% of rich country central banks believing that gold's share of global reserves will in fact rise over the course of the next 5 years, which is up from 38% of rich country central banks last year, according to a key survey. Another 13% of such advanced economies plan to increase their gold holdings in the next year, which once again is up from last year, which was only at 8%, with this 13% figure representing the greatest level since the survey actually began. 56% of advanced economies also think that the dollar's share of global reserves will fall. So a very important article there to cover always. And of course, this kind of links into what we'll be going to next, which is, like always, the charts. And as I said before, as I've said in every single morning market briefing, next to talk about is, of course, the US 30 to begin with. Of course, the US 30, the Dow Jones, where actually some interesting things are kind of laying up as we do make our way into the to the midpoint of the week, if I word that correctly. Now, over the course of yesterday, it does seem like the US 30 did push to the upside somewhat, just somewhat more, as price on Monday did of course start down around this lower level of liquidity that we noted. And we noted this area as a kind of area for price where either price could break below, move below that key area of liquidity and continue to lower levels, or in fact price could return back above and into this area, this range, this area between two key areas of liquidity, and continue ranging there, which is of course what we've seen since the start of June, and that's seemingly what is now playing out, as on Monday we did see this rally to the upside, as we did note in yesterday's morning market briefing. And over the course of yesterday, price has remained at the top of this range and actually utilized that area of liquidity to the upside, spiking into that area of liquidity and back out of that area of liquidity, remaining just below that key area of resistance. So it will be interesting to see now what does play out for the US 30, whether we do now see price sell off from that key area of liquidity and move down to these lower levels of liquidity, or in fact will we see price finally break above this key area of liquidity and move to those higher levels and back to those all-time highs which we were talking about last around the 20th of May and that sort of thing. Of course, this is all very much dependent on fundamental news, data, and political news even. So definitely look out for all of that, as that will definitely be playing into the US 30. But as for what we could be looking out for today, there isn't much US economic data to know. So kind of just keep your eyes on the chart, see what does happen, see what does arise. Next to talk about though is the dollar. where sadly there isn't too much to say, since price over the course of yesterday did kind of break below this key area of liquidity, or actually it didn't break below, it kind of, actually retraced back on itself, hooked back on this area of liquidity, then once again reacted to this area of liquidity and sold off from that area, and now we're kind of, stagnated between these two areas of liquidity that we've previously noted. So not too much happening on the dollar. As I said, we're not receiving much US economic data today either, so there isn't too much to note for what could take place with the dollar today, but definitely, of course, keep your eyes on these key areas of liquidity that we've previously noted, as these areas are very significant indeed. Next talk about though is Euro USD, if that can load. Which did remain kind of with the candle bodies over the course of yesterday below this key area of liquidity, this key area of resistance which previously acted as a key area of support. So price has remained below that level, somewhat retraced back on itself over the course of Monday, of course, and over the course of Friday last week. But over the course of yesterday, price, instead of swinging back to the downside, continuing this move to the downside, price failed to actually push above this key area of liquidity and has remained below that key resistance level. So definitely keep your eyes on Euro USD, as we now do have a serious potential for price to move to the downside. Next to talk about though is pound yen, which is really stagnating. Not too much to say apart from the fact that whilst it is somewhat stagnating, it is still on this kind of upswing movement that we are seeing, and as a result of that, price is nearing these all-time high levels which we saw over the course of last week, or at least saw price kind of break up to over the course of last week, the end part of last week. So it will be interesting to see whether the price does continue that move to the upside, since we did kind of see a retracement take place over the course of last Friday. So keep your eyes on pound yen. Next to talk about though is Bitcoin, which did kind of break below that very significant psychological level of $65,000 a Bitcoin level, which is that key zone, that price level that we noted out in yesterday's morning market briefing as a very serious psychological level, which price of course reacted to last Friday and remained above. And as we did start off the week, price was sitting around this key area of liquidity, key area of resistance, and so we did note how there was a chance that now price had retraced back up to this area of liquidity. There was now a chance that price would once again sell off from that area and move lower. We have now seen that, and price has broken below that $65,000 a Bitcoin level, making its way as low as $64,000 a Bitcoin, which is very, very significant, of course. So keep your eyes on Bitcoin as we do start to trend lower. Next to talk about though is gold, which of course we spoke about on the articles, but now we're kind of looking at that and contextualizing that on the charts. Now the key thing that I've noted recently for gold is that we're kind of forming this flag, this bearish flag of this large downswing, and as a result of that flag, we're kind of ignoring these key areas of liquidity which have previously acted as that kind of key zone which price used as an area of support, and instead we're kind of ignoring that level and trending between, ranging within that area and outside that area, but also remaining within this flag that I've noted out here that seems to have formed. Now we are at the upper level of that flag currently, and the question will be then whether price does remain within this flag and sell off from the current levels to move back to the lower levels down here. So definitely keep your eyes on gold. Very interesting moves being made, as this pattern would kind of hint towards a sell move overall, a kind of continuation to the downside. So we will have to wait and see. Lastly to talk about though is oil, which has now broken above this key area of liquidity that we were talking about yesterday, that price was making its way out of, or to the top of, and this is a very significant move, as of course we've seen a great deal of volatility and price movement for oil, it does seem like recently, since we did kind of end off, or actually start off last week, the week before last, all the way down here at this lower level of liquidity, not last seen since February. So that was a very low level, around the $77 a barrel level, and since then price has actually swung back on itself, reclaimed those losses, and moved all the way to the upside, and we're now breaking above this higher area of liquidity and resistance that price has sold off from on both the 2nd of May, 10th of May, 20th of May, and even 30th of May. So a very significant level which price is now breaking above, and the next levels that we would then be looking at is around the $86 a barrel level. So it will be interesting to see whether price can make its way up there. That's all to talk about on the charts though. Lastly to talk about, like always, is the economic calendar, where I must state that in yesterday's morning market briefing I used the wrong economic calendar. I used the economic calendar for today, so I did give you the kind of wrong economic calendar, which I apologize for, but what that does mean is we're kind of covering the same economic calendar that we covered yesterday, with that very important figure that we need to look out for being, of course, the British inflation rate figure. But firstly, we'll be receiving the Japanese balance of trade figure, then the British inflation rate figure, which is that really important figure which we need to be looking out for, and that'll be greatly influencing, of course, pound yen, but possibly even gold. So definitely keep your eyes on that figure, and following that, we'll receive the Spanish consumer confidence figure. So some very, not much to talk about really on the economic calendar, but a very important figure from Britain, of course, to still look out for. But that's all to talk about on the economic calendar. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.